What's up, fam? Welcome back to the show. Again, coming from a hotel room, and I recorded this a little bit earlier, so hopefully this still stands. I'll give you all the possibilities that can play out. But I'm very happy to see this, and I'm very happy to see this. And because yesterday, I told you, and 5,000, 6,000 of you watched the show, even it was late, and it was a pre-record, and it was a bad setup, whatever. I'm so happy that you did, because if you did, you took trades, and you actually made money. But most importantly, we do have a massive confirmation here. Look at this. This tiny thing is what really matters. This tiny thing is called the market structure shift. And here's what I said yesterday on the show. And if you missed it, that means you're not subscribed. And that means that you're not following me on X. And if you don't do that, well, you're making a big mistake. So subscribe to the channel, like this show and share it with your friends. And also make sure to follow me on X, because I am posting every update that I can do on this little time slot I have on the channel. So there's a link in the description to all. But here's what I said yesterday on the show. Listen, I don't think it's that bad as the market is reacting now. So obviously yesterday I was saying that the CPI reading is, well, the market is overreacting on this increase in month-to-month CPI because it's coming from Trump. And I said it's not as bad as the market is pricing it in. What I do want to see is a close back above the 3.15 trillion. If we can get that, damn, that would be like an insane confirmation that we're going to continue our trajectory up, and then we completed the pullback. This would be a very good retrace, and then we go higher and higher to the 3.45 trillion. If we fail to do that and we close below the 3.03 trillion first in the 1 hour chart, unfortunately to sell, and we got to reevaluate. So here's the thing. I've got good news, because we did close above the 3.15 trillion, as I said, and then we marched about, I don't know, a couple of percent from there. We marched about 2%, and now we're coming back for the retrace. Guys, you have no idea. You have no idea how good this is. No idea. So let me explain what this means and why this is interesting. Now, if you follow my content, you know already the whole thing regarding the recovery, and we need to have a 50% retrace, and we just got that. And after the 50% retrace, we had a market structure shift. A market structure shift on the lower time frame, and any time frame basically, but here in the lower time frame is a confirmation that there is reversal happening from the retrace on the higher time frame. So as you see here, this is a higher high after continuously making lower lows, lower highs, lower lows, lower highs, whatever that is. You might be thinking that this is not, maybe I drafted it wrong, but you can go from here. You can go, it's a high, it's a low, 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 whatever. Okay, so we did have this trajectory, and we did have lower lows, lower highs being printed. But now we do have a higher high formed. And I told about this, and I said, here we longed everything on this retrace. Total market cap went up 4%. We've got tokens like AXBT going up 20, 25, whatever percent. We've been trading these tokens. And now, after this news, we started retracing, and I said the same thing yesterday. I said, okay, so we are retracing to the 50% here, which is incredible, which is beautiful, which is great that we're coming back to the 50. We need to see a market structure shift, which is a higher high, just like we saw here. Well, guess what? CPI reading comes out, the market nukes. But as I tweeted, I said yesterday as well, and I said that 3.03 trillion is the bottom that has to hold, and I think it will hold because the market is overreacting on the high month-to-month CPI reading. So I was expecting this to hold even yesterday. And it did actually hold. This 3.03 trillion held very nicely. And what happened, to most people's surprise, is a higher high. A very similar pattern than what we've seen here. Now, when you see this happen multiple times, you have to think that there is a reversal happening, especially because on the higher time frame, it makes complete sense that we rally into this higher time frame OB up here at 3.47. I tweeted about this as well. I have a complete explanation. Go into my profile and check it out. So like the next target is up here at 3.45, 48, whatever that is, around this region. This is the region that we are going to target. So here's the thing. If you go down to the 15-minute chart, here's what and we're literally now, again, I'm recording this 3-4 hours before you're going to watch this. So we're going to evaluate. Maybe this chart is freaking nuking because CPI came in or whatever that is. And then you look at it and then just skip forward because, can you please stop this, brother? Cuz he's here, he's like playing on the fucking PlayStation. He's like, he doesn't realize that we are recording. But it's understandable because yesterday Cuz was like partying with the NFT people. He was like vodka shots and whatever. Now he's just playing on the thing. No. Okay, so let's put this straight out. So here's how it's going. 1, the good scenario. The good scenario is that we have made a market structure shift here, and that's a higher high. And then we need to have a retrace which is just happening, and hopefully by the time you're watching this, this actually completes and there is something like this and a higher high form, and you are confirmed to go higher. But I do believe, and I tweeted this, and I said that this is. Let me just bring this up here for you. Here's what I tweeted. Trading is a game of probabilities. I have not seen a perfectly textbook face-melting high probability setup like this in a lifetime. Price action does not play out something like this, I'll question everything. And this is exactly what I think. Why I say something like this? Because this is my range. Again, if you follow my content, you know how I trade. This is my range. I am within this range. Anything can happen within this range. We can go till the weekend. We can wick through if we don't close below on the 1 hour chart. It can still happen. Anything can still happen on here. Okay, but this is my range. And what I need to see here is consolidation, liquidation, and then initiation, and then a rally. Consolidation, initiation could be a liquidation, initiation could be a higher market structure shift, a little bit of retrace, and then a move to the upside. This is the bullish scenario, and I do think this is going to play out. There's massive imbalance here. There's built up liquidity here. There's relative equal top. Someone DM'd me, or not DM'd me, but commented and said, what do you think about the double tops? Well, this is liquidity. This is very, very good because there's no reason for the market to go above, and then if it took liquidity from here to go back up. But now it did not take liquidity. Therefore, this here is a liquidity void that can be taken. Okay, so again, bullish scenario, we came back 50, we retest this, we consolidate a little bit, and then we just simply move on, and we're targeting the 3.45 trillion. And let's not underestimate that, because 3.45 trillion from here would be about a 10% pump on the total market cap, 25-30% of your favorite coins. Okay, so this is like a massive pump. The bad scenario is that we break below the 3.04, 3.04, 3.034 trillion mark, this low here. If we do break and hold below there on the 1 hour chart, we're screwed. We're screwed, because then the whole setup that I explained, that is the push, 4 hour retrace, market structure shift, retrace, and then higher, is gone. Because then the low will get violated, these relative equal lows will mark liquidity, and then, you know, if we go and close below, wick, not a problem, because that's still a liquidity grab from these relative equal lows. That's fine. But a close below on the 1 hour chart, a candle close below on the 1 hour chart, below the 3.04 trillion, will result in us going lower. And lower can be possibly a 10% drop from here in total. No, about a 5% drop. I do think the low is in here. I told you about this a million times. But this could happen, and then possibly will come down to the 2.88 trillion mark. Okay. That said, these two scenarios. One, we take the low, consolidate, create a market structure shift, and then move on to, look, it's already actually, look at this. It literally touches on to the 50%, and there I see a possibility where this starts pumping like this. But again, it comes out later that you see. What you can do whenever you watch it, if it's bullish, meaning we do see the market structure shift, we are seeing a push from here, you can get in anytime in any coins that show the same trajectory. Know that this is the low. If the low gets broken and have it close below on the 1 hour chart, we are screwed. I am going to get out of positions even in a loss. If we see if we just see the consolidation, look for this pattern, look for consolidation, look for a lower low, a higher high on a lower time frame like this on a 15-minute chart and a 5-minute chart. When you see something like this, again, you can go into different tokens and you can see what it is. I will update you on my X. Now, a couple of things to look for. One, we have PPI coming in today. Now, again, as I said, it's not gonna be a surprise if PPI is gonna come in higher. Like, I know everybody will tell you, oh my God, what the fucking surprise it is. It's not. It's not going to be a surprise. And unemployment claims as well. I don't know what's really going to happen. So unemployment claims can come in as a surprise, because if it comes in higher, then we can say, okay, so the economy is cooling, whatever. But you can also say that because of Trump's action, a lot of unemployment happening. It's very uncertain times. What I can tell you is that the market will short-term overreact and long-term underreact in terms of, or not react enough in terms of the possibility that we can see on the market structure as well. The other thing that is happening today is Coinbase earnings, which can also spoof the market a little bit. I do think it's going to be a beat. It's going to be off the close. It's later in the day. But this can have a little bit of an impact. Most of the major earnings are out. not that big of an impact on the market, on crypto, specifically the earnings. So I do think this is, I'm not saying kind of like a nothing burger, and the market is taking this quite great. I mean, if you look how we're holding up, and if you see the reaction, Cake is up like 35%, Trump is up 11, Sonic 14, Lido 10, BNB. There's a BNB narrative going on. I see 10%. So we do see tokens flying. On the week, we're still obviously down. So this is the pullback that we need. This is the pullback that we need. Also, you can do stocks now on Bento Bubbles. So you can just simply click from crypto to stocks. You can organize everything all at once. It's absolutely insane. And I wanted to tell you about one more thing. Now, the best thing to do when these things come is to actually trade with limit orders, because when it starts, you want to layer in here. You want to layer in. Now, you can choose a bunch of exchanges that you want. I just want to tell you about a deal that we made with VX, a great exchange, non-KYC, available worldwide. You can sign up from anywhere. And most importantly, I went to them and I said, hey, if we want to work together, I need a great deal for the community. And the great deal is that you have 0% maker fees. That means that if you put in a limit order using the link in the description, sign up to VX and use limit orders. That means you place your order on the chart. You pay 0 fees. I spend thousands and thousands and thousands of dollars every single month on trading fees alone. If you trade using my link in the description in VX, on VX, you do not pay any fees. There are sign-up bonuses, 20,000 bonus here, and you got a 5,000 deposit win and VIP and much more. Go and check it out. There's a link in the description. But I also wanted to tell you, of course, is follow me on X, because I am going to update you. I am out here in a conference, so I will not be able to like come on live here. I will be out, but I will always be able to tweet. And if you scroll through my profile, you will see that I literally dedicated my life to updating you guys on whatever is really happening. So it's worth following me there. There's a link in the description. And I also want to tell you that you should subscribe to my trading channel, which is the 100X Club. I am going to go live here from the conference and just show you around the NFT conference in Paris and see how it's going. So if you want to see that, and if you want to get trading content, you can do it here. Guys, I truly appreciate every single one of you. Make sure that you remember 3.04 trillion mark. The low should hold. If there's a close below in the 1 hour, I'm going to get out. But I do think that this is just a retrace. And I do think that next stop is 3.45 trillion and a massive freaking pump. And I think we deserve it. Guys, truly appreciate you. You can check out these 2 videos. Let me know what you think in the comment section. You can click here to subscribe. Come back tomorrow. I'm here every single day. Sometimes in the studio, sometimes in a hotel, whatever that might be. But thank you so much for watching. Appreciate you. See you over at X. See you over here tomorrow. And I believe I'll see you in the next one. Take care.